Hi everybody, welcome back to Real Estate Investing Adventures. Why? Because real estate is fun and it should always be an adventure. If you're a return guest, I appreciate you coming back. Welcome. If you're new to my channel, who the heck am I? My name is Jurek. I'm a real estate investor. I have the ability to travel all over the country and help people just like you get started with real estate or others that want to take their real estate investing to the next level. Well, welcome back to this A through Z series on how to get a deal done. What are the steps A through Z that you should consider in doing a deal? What am I on today? The letter I. Yes, I. I for insurance. I for inspection. I for interest. There's a lot of different I's. Now I'm going to cover one or two subjects in this video relating to I, and I also try to give you a golden nugget at the end of the video. So make sure you stay tuned for that golden nugget. People often tell me they like those golden nuggets. Well, part of doing real estate, you have to try to think of everything, and as you do it, you gain experience with every deal you try to do or every transaction you do close. For those of you that are just starting out, sometimes it's very scary to think, can I think of everything? But there are people that are out there to help you. Now, insurance agents or insurance brokers would be a very good contact to talk to for insurance. Any type of property that you're going to be doing, you should really look at getting insurance on that property. Now, some people I have spoke to told me, well, Joe, I'm only going to buy, fix, and flip the property. I'm only going to have it for, maybe 2, 3, 4 months. Do I really need insurance? Yes, you do. Because imagine if you buy this house for $200,000 and it catches fire and burns down to the ground. If you have no insurance on that, it's zero. Now, the other thing you have to remember is liability insurance. What if somebody's working or going by the home, they trip and fall? Who are they going to sue? The homeowner, okay? So insurance is a very important aspect, no matter if you're buying the house yourself to live in, no matter if you're buying the house for a rental property, no matter if you're buying the house for a buy, fix, and flip. It's always good to have insurance, a good broker that can explain to you not only the policies that are available, but what the benefit might be of having such policy. Often when people own a lot of properties, they maybe even get what's called an umbrella policy over the actual insurance policy for the property. I'm not going to go into that in great detail. I just want you to know that is available. And especially as you look at building your portfolio of maybe rental property or acquiring different properties, you want to make sure you have adequate insurance. And it always comes down to cost versus benefit. In the wild world of accounting, as you might remember, my background is accounting and finance. I'm a retired CPA. But in the world of accounting, we always spoke about cost versus benefit. Now, we could do something, but at what cost? And would the cost justify the benefit that we were getting from that particular cost? And insurance would be a good aspect to look at, because based on the policy, what does it cover? What does it not cover? The other thing that we're basically looking at too is what the deductibles might be based on the policy that we get. Here in Florida, you can tell it's a beautiful sunny day, loving the Florida life, living the dream. But what do I want to tell you? Unfortunately, in Florida, we do have nasty rainstorms, hurricanes, things of that nature. There has been cases where properties have gotten flooded. So what do I want to tell you? If you're in an area of the country that has unique type of storms, like a hurricane, or maybe you're out west where the possibility could be an earthquake, earthquake insurance is going to be different than home insurance. A regular home insurance, you may or may not have hurricane insurance. You may or may not, usually don't, have flood insurance in your insurance policy. That's a separate policy binder that they call it that you have to get. So that's another reason why I would talk to your insurance agent, your insurance broker. I'm not an expert in insurance. I just want to make you aware of it to be able to ask the right questions on what does the policy cover, what are other policies that are available, what is unique to our local area here where maybe the property is that you're insuring as to what it will cover or will not cover, what are the exclusions or limitations in the policy, because you just don't want to be caught by surprise when you have a claim. You then realize Sorry, your policy didn't cover that. What do you mean? You didn't ask. Well, you didn't tell me, but you didn't ask, but you didn't tell me. You don't want to go into that vicious circle, right? So make sure you ask your insurance agent, insurance broker. Now, when it comes to another, referral, is a realtor a great person to talk to, maybe to get a referral for an insurance company? Absolutely. So as you're networking with people, and building that power team, don't forget to watch some of my other videos here on the website. I have a lot of videos that talk about building your power team, how to find contacts. I may even put a couple links down at the end of this video to help you out. That way you can go to those videos that may interest you the most when it comes to building the power team, things to ask. I even have the question series, the power team question series here on the website. So if you want to know exactly what to ask a good insurance agent or broker, I have some questions out there that should help you navigate through that adventure, okay? The next I really need to get into is interest. Why interest? I know a lot of people that are starting in real estate and they want to have rental properties, or they want to do buy, fix, and flip, and maybe they don't have the money right now to do it. So they're looking for money sources from other places like hard money lenders or private lenders. And the thing is, they can be a very viable resource for you. If the numbers make sense, then definitely do it. The thing that people get turned around sometimes with interest, are they charging you simple interest, or how is the interest calculated or compounded? Meaning, how are they tying it to the amount of time you're using it, as well as if they're charging you any points, or what they may call origination fee points, to make the loan to you. Because sometimes I've worked with people that my clients, they thought they had a great deal and they were doing a buy, fix, and flip. And one thing they didn't calculate was, yes, I got to close on this property, so I need the funds, and I'm going to also get funds to do the renovation. But what they didn't calculate was the meter starts ticking the minute you take and borrow the money. So when you look at it, is time very important to get the property renovated and get on the market? Absolutely. How about how long does it take you to get an offer? Got to factor that in. What about all the time it may take to closing? You got to factor that in. So let me give you an example. You may buy a property and it may take you 2 to 3 months because it's a heavier rehab to finish. Well, now you're into that money 3 months. You may have the property on the market for another 2 to 3 months. Hopefully you get an offer in 2 months, but let's say 3. Now you're up to 6 months. First thing you have to understand about the interest and the lender, what is the term of the loan? On some of these private or hard money loans, they might be 6 months, 9 months, 12 months. So you got to understand that. Give yourself enough time. But then you also have to calculate the interest. You might originally thought, well, I'll get in and out in 4 months. Now you're up to 6 months and you finally got an offer. You got the offer and they said, well, we need 45 to 60 days to close. Maybe they're a first-time home buyer. Maybe their bank needs the extra time. Maybe they're getting a special type of mortgage loan like an FHA, which can take a little longer. So you actually won't close in another 2 more months. So it was 3 months to renovate it, 3 months to get the offer, and 2 months to close. You're up to 8 months now. All I want to tell you is make sure you calculate the interest correctly and be realistic with the time frame that you believe to have that money tied up. Because every day you don't close and pay off that lender is another day of interest you're accruing that you're going to owe to them, and it's more money out of your pocket. So if it goes a lot longer than you thought it could go, it could turn a great deal into a good deal. But I'd hate to see you turn a good deal into a bad deal or a horrible deal. But if that has ever happened, what I want to tell you, you learned a lesson, you know what to do better the next time. So don't get hung up on it, don't get distraught about it, understand what you can do better. The other point I want to bring up, as you can see, I'm in sunny Florida. It's another beautiful day. I'm living the dream here in Florida. I can't tell you how nice it is. I just love it. When I was a kid and younger, I was from the Midwest. We'd shovel snow a lot, and it seemed like summer got shorter every year. But what do I want to tell you, which would probably be the golden nugget? Understand the cycles of how quickly a market may move. Sometimes here in Florida, the market could move a little slower in the very hot summer of July and August. People may not like moving, or they may not like moving during the holiday time frame. A lot of people like moving prior to the school year to get settled in the property and get their children set. Now, Florida, it's pretty popular year-round, all 12 months. You can basically put a house on the market and get it sold. But looking at areas that are cold, and I think of the Midwest, sometimes if I buy a property, say in October, and I want to flip that thing, and we don't finish it till late November, with the cold weather, if there's a lot of snow, the holidays, people don't like sometimes moving, and they're going to wait to purchase a home usually till after the holidays. Sometimes it's when, after the Super Bowl. Usually in February they get cabin fever and they start looking. So if you finish a house in September, October, it could be a little tough to sell. You may have to factor in a few extra months of interest. That interest is chewing away at your profit. So the golden nugget is, one, be realistic on the total time frame of acquiring it, renovating it, getting an offer, and most importantly, closing on it. Just because you have an offer does not mean the property will close. I have a lot of friends that are realtors and it's sad, but they tell me, I did all this work and we got to closing and something happened and the deal fell apart. And you really feel for them because they don't get paid. And I understand all that hard work, they don't get paid. So when you're trying to flip a house, if it doesn't close because something goes wrong, it can be very frustrating. So I don't want to see that happen to you. So one, make sure you do a realistic time frame, and two, make sure you account for anything that can impact that timeline. Whether it's having the contractors, the right workers to get the job done in the time frame you need it to get it done, whether it's the time of year to get the house listed, that maybe you have open houses and you do everything you can to represent the house in its best light to get an offer on it. So take all those things into consideration, because I definitely want to see you make money out there, and that'll motivate you to do your next deal. So get out there, make it happen, make those dreams a reality. Take care, believe and achieve. Bye-bye.